Hey guys, welcome to the live stream. Welcome to the basement. We have crazy, interesting developments in the precious metals markets. Almost too much for us to talk about, but we're going to cover it all today in this video. $25,000 gold from a top analyst. We'll cover that. A squeeze being talked about by one of the world's central banks. Are you kidding me? One of the world's central banks is talking about a gold squeeze. Maybe it'll go higher than 25,000. We'll have to see how that all plays out. Also, we've got big news out of China about precious metals, gold in particular. And finally, our old friends at Costco. So how are you doing today? Welcome to the basement. This is a piece of gold and silver focused content. It's a big deal when you come here and join me. I hope you feel like you found a little home away from home. You're welcome here in the basement. Everyone's welcome. We love to talk about gold. We love to talk about silver. So please subscribe to the channel. The thumbs up are appreciated. Like, share, subscribe. You know the whole thing. Let's get started by talking about $25,000 gold. And before I forget, I want to mention to you what we're also going to cover are these really scary. So if you have high blood pressure or a heart condition or anything like that, you may want to tune out because there are some also very scary situations developing in the world financial, monetary, and economic system, which will have a big impact on the precious metal. So we'll talk about that as well. Take a big deep breath. Let's get started here. Robert Kiyosaki is at it again. Okay, the end is here. I warned you. What if you threw a party and no one showed up? That's what happened yesterday. This is huge news, guys. The Fed held an auction for U.S. bonds and no one showed up. I thought the Treasury Department held auctions, but anyway. So the Fed quietly bought 50 billion of its own fake money with fake money, right? That's called monetizing of the debt. That means, oh, nobody wants to buy our debt, so we'll just print more money. All right, but the important part here, yellow, the party is over. Hyperinflation is here. Millions, young and old, to be wiped out financially. Wow. In red, though, the good news, gold will go to $25,000. Silver to $70. I think that's low given $25,000 gold. Bitcoin to 500K to $1 million. The Big Print, that's a book by Larry Lepard. I love Larry Lepard. Is the latest book on it. Please read it. The end I've been warning the world about is here. May God have mercy on all of our souls. Now, that's big enough. But what if one of the world's central banks warned of a gold squeeze? And don't worry, we're going to talk more about the end of the world later in this video. But what did the ECB? This was kind of swept under the rug, guys, but the ECB, the European Central Bank, right? They're the bank that runs all of the big European banks, had some scary things to say about gold. ECB highlights gold's increasing risks. But what they're talking about, and we're going to cut right to the chase here, is a squeeze in the gold market, or a potential squeeze in the gold market. In blue, gold continues to reestablish its role as global monetary asset, and the yellow metal is attracting the attention of the European Central Bank. Again, that's the European equivalent of our Federal Reserve. In a paper published on Monday, the ECB acknowledged gold's safe haven appeal amid rising economic volatility and geopolitical uncertainty. We'll go through all this. It just talks about how gold's been the best investment over the last decades compared to the stock market. You know, nobody talks about gold, but this gold is like outperformed everything over many recent time frames. But you go talk to your neighbors about gold and they look at you like you're crazy. All right, here's the good part. In yellow, quote, this is from the ECB report. Should extreme events materialize, there could be an adverse effect on financial stability arising from gold markets. In red, such vulnerabilities have arisen because commodity markets tend to be concentrated among a few large firms. Yeah, like the ones that manipulate the price, but we won't go there. Often involved leverage and have a high degree of opacity deriving from the use of OTC derivatives. Okay, yeah, we know the derivative market, quadrillions, whatever. Margin calls and unwinding of leverage positions could lead to liquidity stress among market participants, potentially propagating the shock through the wider financial system. Additionally, disruptions in the physical gold market could increase, and I made that text big for us because, guys, this is the European Central Bank saying the risk of a squeeze, okay, could increase a risk of a squeeze in the gold market. Hold on. Let's look at each other for 5 seconds. That is the European Central Bank telling us of a potential squeeze in the gold market. So maybe Robert Kiyosaki's $25,000 gold, $70 silver. Come on, Robert, you need to raise that. Do you think, right? Do you feel like doesn't $25,000 gold equate more to, like, I wonder what that would be. Let's say it's 25,000. Where's my calculator? $25,000 gold, and let's say we get to a 50-to-1 gold to silver ratio. This is all live. Thank you guys for being here. I apologize for the technical difficulties. It's always a challenge doing live streams. So we had $25,000 gold and a 50-to-1 gold to silver ratio. Maybe you can do it in your head. I should be able to. I have a degree in accounting, but I got to use a calculator. That would make a $500 silver price. 50-to-1 gold to silver ratio, $25,000 gold. These things are not out of the question. I know everybody thinks we're nutso when we talk about the fact that in April of next year, we're going to have $60 silver. That's my prediction. I say it every video. And if I'm wrong on April Fool's Day, 2026, I'll come on here and gladly say I was wrong. But I think the price will actually be much, much higher. And what are we learning about China, right? I mean, it's everywhere. So we've got Kiyosaki, we've got the European Central Bank, but what's China telling us? Let's go see what's happening in China. Here's an article from Kitco. We got a couple Kitco. Is this from, no, this is from Ernest. Hello, Ernest. Thank you for your great article. Chinese gold demand returns with a vengeance as bullion purchases support stability. And we're going to talk about how crazy this is with the United States and what's going on here with silver and gold purchases. Don't worry, we're gonna point out something ludicrous that's going on. All right, they returned with a vengeance as bullion prices support stability while fueling de-dollarization. Woof! There's a lot to unpack there. Gold is getting a big boost from Chinese investors once again, and mainland demand is helping to push the yellow metal closer to last month's all-time highs as the level of Chinese system appear to be banking. All levels of the Chinese system, I apologize, appear to be banking on bullion for the long haul. The latest customs data released Tuesday showed Chinese imported more gold last month than they had in nearly a year. What? That's crazy. And this despite bullion prices setting a new historic high of $3,500 per ounce in April. Wait a minute. Did I read that wrong? Latest customs data to show China imported more gold last month than they had in nearly a year. Okay, I don't know. That's weird. Oh, anyway, either they imported more gold last month than any other month in a year, or they imported more gold last month than the entire previous year. I think the former is most likely the case. But remember this about China. And when I talk about China, we're talking about India. China and India love gold and silver. China and India both have 1.4 billion people each. Both China and India are the world's fastest growing economies. Both China and India will wrap it all back because this is why it's a big deal, right? Those people, silver and gold, are ingrained in their culture. I know a lot of Indian people. I love them. I know a lot of Chinese people. I know more Indians than Chinese, but nonetheless, I love them all. They're great. They love me because they all love gold and silver. They know that it's a smart way to store wealth outside of the paper, make-believe, la-la land fiat money system. I digress. All right, so let's just review quickly here. We got Robert Kiyosaki telling us the end of the world is here, the end of the financial system. $25,000 gold, $70 silver. We've got the ECB telling us that we could have a gold squeeze. And now we hear about Chinese demand for gold, despite the fact we're at record highs going through the roof. What about the United States of America, right? That great country that I live in, and I love my country, no doubt about it. I don't like what our leaders have done over the last several decades. Gross financial mismanagement. That's not a political statement. It happened by both parties. Right? We are up a creek without a paddle. But to your fellow Americans, right, the ones that watch the cable news, the sheeple, are they clued in? That's a good question, because I'm hearing from bullion dealers that like people are selling a lot more gold back to the coin shops, back to the bullion dealers than they are buying. And my question is, do you think you have the answer to this? I bet you do. Where do you think all that gold's going? Right? If Americans are selling it and the Chinese and the Indians are buying, maybe all that gold is going from here to there, right? Hold on, right here. Here's a beautiful piece of silver. This is beauty. This is one of my favorite of all time. This is from First Mint. It's a 1 ounce silver round. Hold on to it tight, guys. I'm telling you, because the Chinese are trying to suck all the gold and silver. Oh, I'm on the fake background. Hold on a second, everybody. And then we're going to talk about First Mint. Let me see if I can fix this. Hold on. Settings. How did that happen? Virtual background. And what the heck happened there? That is weird. None. Let's see if that fixes it. All right, I'm back. Can you see me better now? Sorry about that, guys. Yeah, I had a virtual background. Anyway, let's look at this again. This is a Buffalo round from First Mint. First Mint is...
Show the coin again.
I am. There we go. Thank you, Susie. Everybody say hi to Susie. She's on the walkie-talkie. That's the Buffalo side, but this... I got to be careful here. It's my favorite silver picture in the whole wide world. That Indian. Look at that. Isn't that beautiful? See where it says First Mint at the top? So First Mint is sponsoring, there it is right there, the gold and silver focus content. You know that First Mint is owned by First Majestic Silver, right? Led by Keith Neumeyer. So the silver that you can buy from First Mint comes from First Majestic Silver. It comes from their mines in Mexico, right? And then that silver gets shipped to Las Vegas, Nevada, which is where First Mint is located, where it's turned into world-class silver bullion products. And then from there, it goes directly to you. So it's really cool. This is like brand new silver from the mine to the mint to you. Do you notice there's something missing there? Yeah, there's no COMEX, no LBMA. This, right? This beautiful... Show you one more time. You got to check this out. I honestly love that. This silver right here has never been touched by the COMEX or the LBMA. And I salute Mr. Keith Neumeyer. Look, go back and check. 2-3 years ago, I would call him the royalty of the silver world, right? He was triple digit silver. That's a big deal. You can go to their website, firstmint.com. They have free shipping over $199. And as a special bonus for you, they have a special discount code, VIPRB, VIP Ron's Basement. I want to say thank you to First Mint for sponsoring the gold and silver content. Guys, I'm not able to be here, not able to be on without the help of the sponsor. So go check them out. Thank you. What else is going on? So we heard about what Kiyosaki said. This is big. This is the scary part. Warning you, okay? I'm warning you. Oh, you know what? First, let's go here. We got to talk about the United States, right? All that gold and silver that's being sucked out. And this doesn't make another one from Ernest. Thank you, Ernest. Costco just announced a $2 per 24-hour limit on gold purchases. So that's that's what's going on here in the United States. They introduced a new limit on how much gold its members can buy. They did this just on Friday of last week. Customers attempting to buy 3 or more of the company's 1-ounce gold bars will now receive the message limit of 1 transaction per membership with a maximum of 2 units per 24 hours. So, I mean, we already know that on a big worldwide basis, the whole gold market in particular, we know what's going on with silver. And now Costco's only letting people buy 2. People that shop at Costco, though, are a little, I don't know. I always say they seem to be the smarter people out there. So maybe they're ahead of the curve, the Costco moms and Costco dads, and wanting to get their hands on some gold and silver. Okay, major news last Friday, Moody's downgraded the United States debt. You know that, right? What we didn't get much attention is Moody's then subsequently also downgraded the debt of the big banks. This situation that is happening right now with interest rates could really, and this is what Kiyosaki is talking about, really tear apart what is happening in the world right now. Hold on here. View tab. Why is that not? There it is. Okay. Now you can see it. Moody's downgrades JP Morgan, Bank of America, and Wells Fargo after the U.S. credit rating is cut. So big news out of Reuters that's not getting any attention. Guys, look, here's the situation. The bond yields are going up because no one wants to buy, because the world knows nobody wants to buy a debt from a bankrupt country. Basically, I hate to be so blunt about it, but that's just what's going on. As a result, interest rates are going higher and higher and higher. Let's go out and take a quick look and see where we sit today on the 10-year and the 30-year. And let's go back here. Make sure I got you shared, which I do. Bonds. Okay. All right, wrong screen. I know, Susie. I'm going to do it right now. Here we go, guys. Sorry about that. We're on CNBC's website right now. Okay, so the 10-year has dropped a little bit. Hold on. There we go. Okay. So you see the 10 years back at what? 4.547. Getting above 4.5 was a big deal. Shoot, they're not showing us the 30-year. The 30-year had gotten above 5%, but the 10-year is really the bellwether. Now, the big situation here, the big problem is that, look, just 5 years ago, we had interest rates at 0.5%. Interest rates have gone up like 9 times, right? From 0.5 to 4.5. That is sending massive, massive reverberations through the economy. Think of this. If you borrowed money at 1%, $100,000, okay? Let's just say $1 million. You borrowed $1 million at 1%. You're going to be paying about $10,000 a year in interest. If that rate goes to 5% or 6% or 7%, your interest expense goes up by 5-6 times to $50,000, $60,000. That's exactly what's happening right now to the United States government. We don't have to pull up the debt clock. Just imagine it, right? $37 trillion in debt, right? And that all that debt has to be refinanced. It rolls and rolls and rolls. It is going to create a massive increase in interest expense for the U.S. government that the U.S. government cannot afford. Okay. On top of that, we've got all this news about the new whatever spending bill that's being passed, that's going to increase the deficit. It's a big mess. But those higher rates also affect consumers. Those higher rates also affect corporations, right? If their interest expense, corporate America has trillions of dollars in debt that they need to refinance. That will make their interest expense go up, which will make their expenses obviously go up, their profit go down, and that could have a very constricting effect on the overall stock market. Okay, it's not a good situation. And the cherry on top is the banks, right? The banks, Bank of America, all these big, massive banks that bought, right, a ton of these U.S. treasuries at 0.5 or 1%. And as interest rates go up, the value of those treasuries go down. Have you heard of a banking crisis? Okay, it's a big deal. It's scary. Okay, let's look at what Kobesi had to say about this. Here we go. And okay, the Kobesi letter says, what just happened? This was yesterday. At 1 p.m. yesterday, the S&P fell nearly 80 points in 30 minutes without any major news. What actually happened was a weak 20-year bond auction, which sent U.S. Treasury yields soaring. Okay, so yesterday, right, they had a 20-year bond. Hold on here, guys. There we go. They had a 20-year bond auction, and nobody showed up. The U.S. government was like, hey, we want to sell a bunch of U.S. treasuries. Nobody showed up, right? It was a failed auction because people are waking up. And what happened as a result? We saw a little like flash crash or a not a good situation basically in the S&P. What's the S&P 500 at right now? Hold on. Let's go take a look. All right, the S&P 500 is right now at about 58, about 6,000. So more than 1.5%. Where did it go? There it is. A drop in the market, right? Because the bond market is failing. Susie was going to say something to me, but she decided not to. Right? But so that's what's going on. This is what Robert Kiyosaki is talking about. This is what Larry Lepard is talking about. This is what Ray Dalio is talking about, right? The founder of Bridgewater Capital, right? The one of the biggest hedge funds in the world. He started it out of his apartment, and it grew, and the guy is smart, right? The system is not sustainable. Now, what does that mean for gold? What does that mean for silver? Look, at the end of the day, if we're using dollars as the unit of measure, right, to say how valuable this is, an ounce of silver or an ounce of gold, the only thing that can happen is printing of money, dilution of the currency, big inflation, right? So if we're going to use the dollar to measure as a unit of measure for gold and silver, we will see much higher prices. I know, right? Look, I've been down here making videos about gold and silver for what, 4 years now? And back in the day, see the old bear back there? That bear used to be blindfolded, and the blindfold said $2,500. A lot of you remember that. And that's when gold was $1,400, $1,200, $1,600. And people would say, Ron, you're nuts. You're lying to people that gold could ever get to $2,500, right? You're a shill. You're trying to sell gold, then, which I wasn't. But anyway, none of that was true. I believed that we would see 2,500. And it came right around the time frame that I'd looked at. Now we've hit $3,500 gold. And I'm going to tell you something about silver, and I'm going to tell you that right now. Okay, listen up. Okay, silver has even more to run than gold, in my opinion. I don't buy this idea. Somebody said it the other day that, silver's now just become an really silver, right? Silver was money before gold was. Right? Look it up. Send me an email if I'm wrong, but I know I'm right. Silver was used as money in this world before gold. Silver is a monetary metal. The fact that it's an industrial metal, well, that's just a cherry on top. That's just a bonus, okay? So that's where I think we're going. If you look, $60 silver by April Fool's Day 2026. I'll sit down here and say I'm the fool. I don't mind, right? But I think I'm going to be right. Let's go take a look. The other big thing happening right now, Japan's bond market is imploding. And you've heard of the yen carry trade. That's imploding. That's when people were borrowing yen very cheaply and using it to buy other assets or investments that made more money. It's not good. It's not a good situation. Let's go take a quick look at the DXY index, guys. And you know what? We'll go look at the debt clock for fun too when we're done there. Oh boy, the DXY broke above 100 again. This is the key level that we are watching. And there is a big fight going on. This right here is a big deal. The DXY index. The DXY index, for those of you who don't know, is an index. So it just compares the bunch of cruddy fiat currencies. It compares the dollar with the yen, with the euro, and I think the Swiss franc, a few other currencies. It is not a measure of value. And let me explain to you why, and very easily we can see that. If we look at like a 50-year chart of the DXY index, look, we're at 100 right now. We were at 100 back in 1986. We were at 107. We were at, oh, here, look. Back in 1986, you were probably alive then. The DXY index was at 116. So I'm going to circle that. This is critical to understand this concept right here. Okay. This was 1986. So that means that in 1986, measured by the DXY index, the dollar index was 115. The dollar was 15% stronger in 1986. So I ask you a question. If you took, that means in theory, that if you took a $100 bill today to the grocery store, that you should actually be able to buy 115% of the groceries that same $100 bill would have bought you in 1986. You know that's foolish, right? A $100 bill in 1986 would probably have bought you at least 2, if not 3 times as many groceries. So nonetheless, you didn't ask for that bit of education. This is critical. This is key. This will have an impact on the metals as we go forward. But right there is the 100 level where I underlined, and I will draw a line across here. As you can see in this area right here, I kind of draw a line on top of it. We've been fighting to stay above 100. The lower that index goes, the more favorable, the more of a tailwind that will be for the precious metals. But again, the key thing to remember here is that essentially what we're talking about with the DXY index is comparing the best 4 cars on the worst used car lot in your hometown. Or another way I've heard some people talk about the DXY, it's like 4 guys jumping off the top of the Empire State Building and them comparing themselves, like who's falling faster, who's falling slower. Doesn't matter. They're both headed for the same eventual demise. Other big stuff going on right now. The world geopolitically is not calming down. Yesterday, we had this word that they're considering 500% tariffs. Russia and the United States apparently aren't getting along too well again. So we're talking about 500% tariffs, not on Russia, but on countries that buy energy from Russia. Big countries. I think Turkey was in the list, whatever. So on a geopolitical level, we are still in a very precarious situation. So everywhere we look, guys, look, I remain totally optimistic, bullish on the precious metals. I love precious metals. I always have, always will. They're the timeless store of value. Kiyosaki is talking about 25K gold. The ECB is talking about fragility in the system that could lead to a squeeze in the gold market. We've got China importing gold at a feverish pace, right? And on top of that, Costco has decided to limit the amount of gold that their customers can buy. Hey, thank you for joining me. I do want to say thank you to my other channel sponsors, Ledger. Ledger is the hardware wallet.
Don't forget to say hi to a few people in the chat. Sorry to interrupt.
You're fine. Ledger, thank you, Susie. Ledger is the hardware wallet crypto security leader, and MoonPay, right? They are the most innovative and fast-growing company in the fintech sector. Those are companies you're going to hear about in the future. Also, Susie would like me to say hello to some people, and I would like to say hello. So let me pull up the comments here. If you want me to say hi to you, say hi. Tell me where you're joining from, whatever. Hey, Debbie, good to see you. Hey, SLV. All right. There's Jerry Mandarin. All right. I'm waiting for the comments to come through. There's Run Gun, Jerry Mandarin. There's Susie. Hey, Randy, good to see you. Hey, Jerry again. All right. Let me go down here. Anybody wants to say hello? Hey, ODBG, Old Dirty Bastard Garage, one of my original favorite usernames ever. ODBG, good to see you, brother. Hello, SLV, Alida, Papa Huddle, Debbie S. All right, guys. Ronsky. Yeah, we're back. Run gun. You got it, guys. All right. Thanks to Jake from Jake's Custom Parts. I don't know if he's on here, but he's usually on. Great, foundational member of our community. Guys, it's going to be interesting. It's going to be interesting to see how all this plays out. One thing for sure, we can all be there for each other. You're always welcome in the basement. I want you to feel like you found a home away from home. Again, please, if you haven't already, subscribe to the channel. Share this with your friends. Be careful out there. All right. Take care. And I will see you next time.